What's up, everybody? Welcome back to Crypto for You. My name's Tony. Today I'm looking at Bitcoin. And of course, Bitcoin is not looking good. What the correction from 98,000 to 88,000 did, though, is a lot scarier than you think because it could perhaps be setting Bitcoin up to recreate what it did almost exactly a cycle ago. And that outcome last cycle was the start of the bear market. I want to discuss exactly what I think will happen this cycle, what's the reasons for it, and how we could perhaps avoid falling down to huge lower levels. I want to talk about all that and more in this video, so let's jump straight in. Starting off, I want to look at a smaller time frame. I'm looking at the 4-hourly right now, and what Bitcoin did over here was pretty interesting. Bitcoin was seemingly creating an ascending triangle, and what it looked like was a breakout performing perfectly to the target of around 1.7. I know many people who took personally longs trying to reach this 108 target. It would have been good if it did reach, but instead we stopped at 98 and plummeted down to $87,000 instead. Now, the reason Bitcoin getting rejected at 98,000 is so significant for me is because if we look at the daily time frame, that $98,000 area perfectly gets us rejected off of this huge trend line that I drew. And this trend line is very significant for Bitcoin. If I zoom out, Bitcoin, as you guys probably know, has been in a bull market since November of 2022. And we've been rising and falling, breaking all-time highs, going all the way up to 126,000. In the process, creating a bullish support trend line. And every single time we fall down, if we want to make a higher high and make new all-time highs, we have to fall down to this trend support line and confirm support. We were doing that successfully until November of 2025 when we broke below that trend line and were trying to break back above it with no success. And that pump to $98,000 was another confirmation of rejection. And it actually looks a lot worse on the weekly time frame because this rejection on the weekly time frame is so bad, it just left as a wick. This shows that the bears are starting to gain more momentum, but that's not the only thing that $98,000 got us rejected from. If I plot the EMA ribbon instead, $98,000 made us rejected from the weekly EMA ribbon, which is something else that Bitcoin during the bull market also rides. That is not good at all. Here's the interesting part. If you look about exactly a cycle ago, over here, last time Bitcoin was also in a bull market, we were doing the exact same thing. First, let me hide the EMA ribbon. Bitcoin, look at this, was also creating higher and higher highs, creating a trend line. And what did it do? On the January 3rd, 2022, it broke below this trend line, trying to confirm resistance, and it couldn't. And then over here, it tapped it one last time, getting rejected. At the same time, if I put the EMA ribbon back on, it was also trying to break above this EMA ribbon, and it had an unsuccessful attempt over here, and that triggered the bear market. Now, this doesn't stop here. The similarities continue because what Bitcoin is forming due to this $98,000 break, instead of an ascending triangle, is a bear flag. It's pretty clear. Look at this. If I adjust these trend lines, this looks like a very convincing bear flag. And this bear flag could take us down to around the $62,000 area, plotting it from this peak down to this low and drawing it down here, $63,000. Now you might be going crazy and you might be saying that $63,000 is unreachable. But I want to explain to you guys why $63,000 is arguably the best place for Bitcoin and most likely place for Bitcoin to fall down to if we break out of this bear flag to the downside. If we break out of this bear flag to the downside, we already know the target is 63,000. But also, think about this. In a bull market, we usually do Elliott waves. This is a perfect example of a 5-wave move Elliott wave. What happens after an Elliott wave? An ABC correction wave. And ABC correction waves have 3 steps. We have done step 1. We are currently in part B, and we will do step C after this. And there's a very easy way to predict the target and place that Bitcoin will fall down to in a correction wave. That is with a Fibonacci retracement. Plotting it from the bottom at 24,000 all the way to the top at 125,000, you can see that the golden ratio almost exactly lines up with the target of the bear flag. And the golden ratio, 0.618, is the most likely place for Bitcoin to fall down to in a correction starting from all-time high. So the golden pocket, the strong golden pocket, is in a range between $63,000 and $60,000, which is why I'm going to say if Bitcoin breaks below this trend line, showing that we're in a bear flag, we are falling down to $63,000. But this is not all. There's some more support levels down here, some huge ones. Whenever Bitcoin starts, I'm going to say, making a bear market, what it starts falling down to is the 200-week moving average. Here it is. It's at $58,000. By the time we reach 60,000, it's most likely going to be inside of this golden pocket, which means that Bitcoin will once again repeat what we did last time, falling down to the 200-week moving average as support. There's one thing that is keeping us alive, and that is the 100-week moving average, which is currently acting as support, letting us bounce on top of it. As long as we stay above the 100-week moving average, I don't think we will fall down to the 200-week. As soon as we break this, the next support level for Bitcoin to fall down to would be this right over here, 74,000, hitting a super key support level. As long as we stay above $73,000, we have a chance to continue our bull run, although the chances are very slim because we will be hitting this previous higher low. If we break $73,000, we show that we are breaking higher lows and making a bearish trend instead. Of course, 63,000, like I said already, is a very high likelihood thing, but how can we save this situation? Well, plotting the Ichimoku cloud instead on the weekly time frame shows that we are currently confirming support on top of it. As long as we stay inside of this Ichimoku box, we are fine. If we break below it, that is bad. And look at where it ends. If we enter this bubble, this is uncertainty. The bottom of the Ichimoku cloud is at $73,000, which is why I'm saying that the first target that I think if Bitcoin breaks below $86,000 is most likely $73,000. If we break below $73,000, then 63 is the next huge target due to it being the 0.618 correction. What Bitcoin needs to do right now is it needs to confirm support, what it's currently doing, and rise back up, attempting to break above $100,000. And if it is able to break above $100,000 and basically illegitimize this bear flag, then perhaps it has a chance to rising back. But currently, the pattern is perfect, and the pattern is showing that we have a very likely chance to fall down to 63,000. I know this is not good news, but there is a silver lining because, first of all, this isn't the 80% corrections that we're used to. Bitcoin is changing. It's getting more, less and less volatile. And as it's getting bigger, its corrections are getting smaller. Currently, for Bitcoin to fall down to 63,000, that would be another 29% correction. From the all-time high, that would bring the total correction to be 49 or 50%. Now, compare that with the previous bear market rally. The previous bear market rally from all-time high down to lower levels was 77%. From the breakout of the bear flag, that was a 60% correction. So 49% is a loss less than 80. That's already something that's good. And number two, after we reach $63,000, I would say that is a very good position for Bitcoin to stop at. Of course, we will have to take a look at it when it gets there. And it has a big likely opportunity to resume its outcome to the upside. Now, of course, for the short-term people, for the midterm traders, this is very bearish news. But personally, for myself, I believe this is very bullish for the long term because I did agree that Bitcoin was starting to overextend. Its constant pushes to the upside, followed by these volatile crashes, show that it's getting less and less stable and it needs some rest. It needs to rebuild its strength. And that's exactly what a fall down to 63,000 could do. Again, though, it's not guaranteed. We first have to, one, break below the bear flag, and two, we gotta break below 73,000. If we stop there, great. If we continue below, understand that this is exactly what's going on. With that being said, I hope you guys enjoyed this video. If you did, leave a like down below, subscribe if you haven't already, if you want to see more content like this. I'll see you guys in the next video. Bye.